Namaskar and welcome to our commodities podcast. I'm Ravindra from Kotak Securities Commodity Research Desk, extending my heartfelt wishes for a joyous Diwali. May Goddess Lakshmi bestow good health, wealth, and happiness upon everyone. And as always, we'll highlight key developments to keep an eye on in the current week. Last week, the Federal Reserve's communications significantly influenced market sentiment. Powell's recent caution about potential further rate hikes shifted the optimistic tone that started the week on a high note. Initially, weaker than expected US jobs report and ISM services PMI figures led to beliefs that a Fed was concluding its rate hike cycle. Investors adjusted the expectations, anticipating rate cuts by mid 2023, causing the US dollar to dip to a 6-week low of 104.84. However, the greenback rebounded above 105 as doubts arose about the speed of interest rate cuts after Fed members expressed reservations regarding the cumulative tightening of financial conditions. The cautious stance on its potential negative impact on economic growth and the Federal Reserve Chair's statement about not hesitating to tighten policy for inflation control added to the hawkish sentiment. This ended the winning streak in US equities and propelled the dollar higher towards the 106 level. On the data front, US consumers' long term inflation expectation increased to 4.4%, the highest since 2011, compared to last month's 4.2%. Concerns about high borrowing costs and the economy's prospects pushed preliminary UOM figures to a 6-month low of 60.4 in early November. Elevated US inflation expectations may strengthen the belief that interest rates will need to remain higher for an extended period, providing support to the dollar ahead of US inflation and retail sales figures this week. In the wake of these developments, COMEX Gold faced its second consecutive weekly decline, influenced by easing geopolitical tensions and signals from Fed officials pointing to a prolonged period of higher interest rates. Silver also closed the week with over 4% downside, mainly driven by weakness in industrial metals. As gold prices encountered headwinds, preparations for Diwali in India, a festival associated with luck, positivity, and prosperity, were underway. However, the near record high gold prices may present some challenges to retail jewelry buying during this festive season. From a technical perspective, COMEX Gold corrected after reaching a peak near $2019 per troy ounce, but still remains above the falling channel from mid October, indicating an overall uptrend. The current corrective move may extend to $19.20 to $18.96 if the $19.38 support of the 60-day simple moving average is breached on a closing basis. Alternatively, if the support holds, the prices could consolidate until the double top near 2009 per troy ounce is surpassed. In case of silver, the COMEX silver also experienced a correction, facing resistance near the 200-day SMA at $23.40. The week concluded with the price settling near a critical support range of $22.20 to $22. A potential rebound is possible if the support holds, forming an inverse head and shoulder pattern supporting a bullish outlook. However, breaching the $22 support over consecutive daily closings could prolong the decline. The primary trend remains upwards, with the current downward move appearing corrective after its ascent from $20.80 to $23.80. Coming to WTI crude, the black gold registered its third consecutive weekly drop, reaching a 4-month low of $74.91 per barrel. Geopolitical risks in the Middle East remained contained, and talks of normalizing ties with Israel were on the table. Concerns grew over weakening US gasoline demand, projected to reach a 20-year low per capita next year, as indicated by US government report. OPEC maintains optimism, expecting oil demand to remain robust despite global economic challenges. Iraq, supporting more output cuts ahead of upcoming OPEC Plus meeting, has capped the downside at around 4%. On the technical front, prices are trading slightly above, in case of NYMEX crude oil, prices are trading slightly above the 200-day moving average support near $76. Uh, if we take a bit of a cushion, the low hit in the previous week, which is close to 74.91, would act as a support now. Until it closes below that, there is a possibility we might see some kind of a bounce back, which might extend close to $80 per barrel. But if it takes out 74.91 on a closing basis, then we might see further downside in prices, which might extend towards $72.50. Finally, coming to base metals, LME base metals fluctuated, influenced by weakening dollar and early weak optimism about additional stimulus. However, uncertainty about Fed's rate trajectory and concerns about a weakening Chinese demand shifted sentiment. China's October exports fell more than expected by 6.4%, while imports surprisingly rose by 3%, indicating sluggish global demand for Chinese goods. Zinc experienced a rally, surging to a 6-week high, driven by substantial increase in LME cancel warnings, particularly in Singapore and Malaysia. On the technical front, zinc is still looking positive. However, it might face resistance near the recent highs of 230 to 234. On the lower side, 224, which is 224 to 223, would act as a good support, which is the 60-day SMA. So we expect the prices to trade in this very range. And in case of copper, copper has once again dropped, testing a high close to 715. Support remains near the October lows of 695.25. If it goes below that, we might see further downside, or else there might be a double bottom, and from there it might reverse. So as of now, 695 would act as a good support, and on the upside, resistance, immediate resistance is placed at 705, and above that, the resistance is close to 715. The current week is crucial, focusing on US consumer price index data, retail sales, and various Chinese economic indicators. Any signs of an uptick in US inflation or consumer spending could reinforce the belief that Federal Reserve will maintain higher interest rates for an extended period, particularly impacting bullions and also other risk assets. So as we conclude this audiocast, we express our gratitude for your ongoing support. May your trading endeavors be prosperous and fulfilling. Thank you for tuning in.